Hey guys, welcome to yet another lesson. We are discussing manufacturing again. In this question, or in this video, we'll be looking at question one of the November 2016 question paper. So without any further more to do, let us jump straight into it. So the first question is on concept. It says, give a concept for whatever that is written in those questions. So let's start with 1.1. And we've been given options there in the box, so it should be easy. So the first one, it says salary paid to office workers. If you look at those, it's not direct material cost. That's not direct labor cost because you're an office worker. It's not a factory overhead cost because it's paid to office workers. So it will be an administration cost. All right. And then moving on to 1.1.2, it's a cost of raw materials used in the production process. So if you use raw materials in the production process, that is essentially what direct material cost is. So it will be direct material cost. And then the third question there, it talks about commission paid to salesperson. So obviously that relates to selling and distribution. So that will be selling and distribution cost. And last but not least, it says rent paid for factory buildings. And that will be their factory overhead. Remember guys, overheads are factory expenses that are indirect. So when you pay rent, it is indirect to the units that you're producing because it has nothing to do actually with production, but it has to do with the space that has been secured for production. So in a way, it does relate to the factory, but it relates indirectly. All right, let's just write those answers down. So we said, the first one was, sorry. So the first answer that we had was administration cost. I'm just gonna write admin cost, and then the second one we got is direct material cost, and I write DMC. And then the third one that we got is selling and distribution cost. I'm gonna write S and DC. Please guys, when you're answering this question in exam, write in full. And then the last one is factory overheads, and I'm just gonna write FOH, that's my factory overheads. All right, so done with question 1.1, and then now we move on to 1.2. Let us look at 1.2. So question 1.2, we're dealing with Google manufacturers, and then they say you're provided with this information relating to Google manufacturers. For the year ended 2016, the business produces one style of handbags. On the first questions, there is you calculate direct labor cost, and then secondly, you calculate their direct material costs, and then after that, their production cost statement follows. So let's try to answer those questions first, and then we'll look at the rest of the other questions. So we're going to start with the information that relates to the direct labor cost and make sure that we find it. Okay, that's information A. As you can see, it says there in information A, workers involved in the manufacturing process. So the number of workers is 5, and then they have a basic, which is the normal wage. Then they have an overtime rate. And then for the basic rate, they're getting 40 rand an hour, and in total, they've worked 1,920 hours. So that's per worker. So each worker has done 1,920 hours, and they are being paid 40 rand for each hour that they worked. And then secondly, there's an overtime. So each of them has worked an overtime of 90 hours, and it's a basic rate plus 75%. That goes to around 70 rand an hour. And then you are told about the deductions of the basic wage. You deduct that, so maybe for SARS, for pension, or for whatever reason. And then you're also informed about a contribution to the basic wage. So the employer's contribution is 11.5%. So we need to calculate, we need to put together all that. So let us start, let's do it step by step and start with one thing. So we know the normal wage. So we're going to say the normal wage. We know that we have 5 workers, right? So we have 5 workers. They each getting paid 40 rand, and they each worked 1,920 hours. Let's close that bracket, and then we'll say plus Now, this is for overtime. So for overtime, we know that it's 5 workers. They're getting paid. So you're gonna have to open another bracket on this one. So in this bracket, they're being paid 40 Rand plus 75%. So you're gonna say 40 times 1.75. And then we're gonna multiply by, and then we're gonna multiply that by the number of hours overtime they worked, which is 90 for each worker. And then thirdly, when it comes to deductions, those deductions are not necessarily deducted so that they can go to the employer. They don't go to the employer, they go towards their SARS or their pension or medical aid funds. So we cannot say that the employer is saving anything from deductions. But if the employer is contributing towards their UIF, their medical aid, towards their pension, then the employer needs to also account for that. And therefore, the last thing to account for is what they talked about here, which is employer's contribution, because we have considered the basic wage and then the normal wage as well. And then now we need to take into account the employer's contribution. So the employer's contribution is 11.5% of basic wage. Remember, guys, how do we calculate the basic wage? We said when we calculated the basic wage, it's 5 employees multiplied by 40 Rand per employee, and then multiplied by 1,920 hours, and that should give you 384,000. And then the employer was being told they contribute 11.5% of that. So what you need to do then is to say plus, in our calculation here, what you need to do then is to say 384,000. Because 384,000, this is the first part of this thing is calculating the basic wage, because the basic wage, as I said, is 40 Rand, there's 5 workers and they've worked 1,920 hours. Hence we have that. And now the information also says that on top of that, the employer contributes 11.5%. So you're gonna multiply that by 11.5%. And then our answer will be 459,600. So that is the direct labor cost. And then we move on and calculate the direct labor cost. So so information B, that's actually on the direct labor cost. They say raw material purchased is kept in a storeroom before being issued to factory for production. Stock is valued according to the weighted average method, right? So you can see here that they bought so many meters of whatever fabric that is being used. So they had 1,350 at the beginning, and then they purchased an additional 5,400, and then they took 5,500 and sent them to the factory. So the cost, the raw material cost for this year would be the cost of these 5,500 materials, because now the ones that we're sitting with, they're not yet a cost, we're just sitting on them, we still have the asset, and in order to get a cost from an asset, you have to use it. So when you use an asset, that's when it becomes a cost. It's like a car, when you buy it and not use it, technically there's no cost, but through wear and tear, then you deplete that cost. Same with inventory. If you're keeping it and not selling it, it doesn't become cost of sales. It becomes cost of sales once you sell it. So same thing applies with the raw material. If you're still keeping that raw material, it will not be the cost. It becomes the cost when you take it and transform it into production. So that will be the 5,500 units. And what they told you here is that stock is valued according to the weighted average method. So we will need to calculate the weighted average cost of inventory. This will be easy because, I mean, you have an opening stock of 1,350 units at a cost of 131,500, and then you have 5,400 purchases at a total cost of 584,000. So if you take these two and add them together and divide by these two added together, you get the weighted average cost. And then once you have the weighted average cost, you can then multiply it by 5,500. So let us do it now. So to do this, what you just need to do is I'm going to say 131,500 plus 584,000. And then you divide by the number of units, which is 1,350, 1,350 plus 5,400. And then what you get there at the end of the day, you get weighted average cost of 106. And then once you have the weighted average cost of 106, you say 106 multiplied by 5,500 units of fabric, and that will give you an amount of 583,000. You will get an amount of 583,000. It's practice, but I'm sure this one has been easy so far. And then the following question, it says you have to do a production cost statement. This is an easier one because there's information here that says there's no work in process stock. So the only things you have to worry about is the direct material cost, direct labor cost, and factory overheads. And if you see this information, they've already given the factory overhead already. So we don't really have to work anything out. So what we then need to do would be to take our production cost statement, it starts with the direct material cost. So the direct material cost, as we just calculated here, is 583,000. And then you have the direct labor cost. Direct labor cost, as we just calculated, it's 459,600. 459,600. And then if you add them together, you get a prime cost, which is the prime cost is 1,042,660. Sorry, there I need to fix my direct material cost. It's actually 660. Sorry. $660. Right. And then after that, there's no work in progress. So the only thing that you need to do is to add factory overheads, factory overhead cost, and you get it directly from here. It's 343,340. So that will be 343,340. And then if you add that, you will get a total amount of 1,386,000, and that should be your production cost statement. Thank you guys for joining. I will see you in the next lesson. Cheers.